we have here Western Exploration. Darcy, welcome. We have something very interesting just came out. That's your PEA. Look at the market, it's exciting. Even gold is down today. So your stock is one of few still up a little bit.
Yeah, well, thanks for having me, Chen. Good to see you again. So, yeah, we put out the PEA on Thursday of last week, so I think it was the 8th. And we said when we went public that we would be working towards getting a PEA out on Doby George, and of course, continuing to grow the Gravel Creek resource. I think it's important to remind everybody that we have two different parts to the Aura project. We have the Doby George heap leach oxide project, and then we have the Gravel Creek Wood Gulch discovery area, which is quite different. But this PEA was just on the Doby George resource, and we were pretty excited about the results that we received.
Yeah, that was very impressive. Again, maybe you can explain to us what is heap leach and what's advantage for heap leach. And then again, this is a very, very, very small part of your resource. Yeah. So then people can see the valuation in your stock.
Yeah, and we've known about Doby George, Chen, since the late 90s when the company was private. They acquired the asset. It was almost put into production in the mid 90s by Independence Gold. So we knew that it had the potential to be a good economic open pit heap leach deposit. I think what we really focused on was highlighting the grade. At over 1 gram per ton, the margins that this project can deliver at any gold price are significant. At the base case of $2,150 gold, a ton of ore generates a margin of almost $50 a ton. So very significant margins for an open pit heap leach. And at $3,000 gold, which we did the upside case, we're almost generating $90 per ton of, $80 per ton of margin. So it produces a lot of cash flow, no matter what the gold price is. So it is pretty straightforward. It's oxide. It's open pit. It occurs right at surface. And it doesn't require agglomeration. It doesn't have any deleterious elements. So it's just a straightforward, easy open pit heap leach deposit. And we did the PEA at about 7,500 tons per day. And the reason we did that was kind of the point where you maximize the net present value, which came out at $3,000 gold to be about $211 million US. And of course, when you build the project, you'll look at how you can decrease the capital, which right now we've estimated, without including working capital, about $115 million to build it, including EPCM, et cetera. But as you go towards, potentially constructing it, you look at how you decrease capital flow, how you extend mine life based on what we know. But the thing that doesn't go away is those margins to the gold price because of the grade.
Okay, great. Just tell us what's the cost, estimated cost, cash cost, and all-in sustainable, so investor can get an idea how much free cash flow you can get.
Yeah, so the average all-in sustaining cost at $3,000 gold is just under $1,200 an ounce. It's about $1,197. And at the base case, which was $2,150 an ounce, it was a little less than that, about $1,160. And it's a little less because, of course, the higher gold price, you're paying more royalty, so the cash cost goes up.
Wow, great. So all-in sustainable. So people can calculate from less than 1,200, that's the cost, and then you can sell whatever your price is to the market price. When you get in production. Right now it's 3,000. People are talking about 5,000, 6,000. I mean, they can imagine what kind of margin they can get.
Yeah, and on an annual basis, the operating cash flow from this deposit is about $112 million, something in that range per year.
Cash flow. Amazing.
So those margins deliver cash flow. And so that is always constant when you have that grade. And then going forward, what we need to work on is bulking up the resource. We have additional exploration targets at Doby George. Plus, we have the Wood Gulch oxide deposit of about 100,000 ounces that we haven't considered yet. So we've got room to grow the resource and extend the mine life. And then, as I said before, as you go towards, pre-feasibility, you look at options and how can you bring down that capital? And so we'll be doing both those things, increasing the resource and bringing down the capital. But again, we've preserved that grade, which is what really drives the operating cash flow margins.
Wow, great. Maybe you remind us what's your market cap right now for of your stock?
Yeah, the market cap is about 30 to 35 million Canadian. So we don't think that there's a lot of value for Doby George in the story yet. But we're starting to talk to a lot of our shareholders in the markets in general about what Doby George could be for the company. I think, as we continue to de-risk it through moving into the pre-feasibility study and starting the baseline studies, I think then you start to get a little bit more credibility, and we should see, the market value of Doby George increase as we do those activities for sure.
Well, excellent. So, tell us how the permit process. I know President Trump want to make build mining great again. So build a new mine great again. He's giving a lot of fast track approval. So relatively, it's much easier than a few years ago. Lead us through what kind of process did it take to get approval to get to
Yeah, so
the mine?
the last time we reviewed this in detail was 2019, and it was about a 24 to 30 month permitting process for federal and state permits. One thing that we've done, Chen, is we do have private fee land where we have a mineral lease immediately to the south of Doby George. We can buy that land at any time up until the end of 2031. So we've put all of the infrastructure on private fee land. The heaps,
good.
the facilities, the pits themselves are still on Forest Service, which we will need to permit. But there's two examples in the same Forest Service as us that have been permitted. Jarrett Canyon, of course, has been operating for 30 some years. And Big Springs on the Warrior project was permitted in 2019 with the same Forest Service. So there's a history of being able to permit mining operations. And of course, in this part of Nevada, just north of Elko, we're in mining country. So we work with regulators that understand the industry. As we move the project forward, we're going to start the baseline studies in full this year, and we'll look as soon as we get that pre-feasibility study to start the permitting process.
Wow. Okay. Well, sounds good. So, as you progress, and investor can see what's the valuation, right, in your stock. Hopefully, you get the appreciation from here.
I think it's important to put these parameters around the resources so that you can start making that connection from in the ground to what it would look like when it comes out of the ground. Because quite often, I think the assumptions we make are always changing, and depending on grade, et cetera, one deposit to the other can be very different.
Okay. Okay. Great. Thank you. I mean, maybe quickly just explain, tell us what's your exploration plan for the rest of the year. What other catalysts are coming for investors?
Sure. So we are going to be drilling at Gravel Creek again this year. We're going to be focusing on what we call the Thomasina target, which is part of the Wood Gulch deposit. The reason we're doing that, Chen, is we think that the Wood Gulch deposit is an identical subparallel deposit to Gravel Creek, but much shallower. It starts right at surface. It was mined by Homestake in the late 80s. And there's no drilling on that target, even though it's about 3 kilometers long and extends to depth. We know from some drill holes that were drilled adjacent that target back in 2013 through 2017 that we did get economic gold values up to over 11 gram per ton gold and 300 silver adjacent that target. So that's where we're going to focus our drilling. We're looking to do between 15 and 20 drill holes there, starting in probably late June of this year. And if we're successful, we'll have identified a subparallel Gravel Creek deposit and end up with two really high quality drill targets of Gravel Creek, that being this new one plus the Jarbidge that we were doing last year.
Okay, great. Sounds very exciting. So investors should follow you and for the new progress. More progress and more news coming later this year.
Yeah, we look forward to delivering that news to the market here starting probably July, August, somewhere in that time frame, Chen.
Okay, great. Thank you, Darcy. It's great PEA. That's a big milestone for your company, and the investor can start to put the number together, at least can see what's coming. If they build a new mine, if you or maybe someone else want to pay a lot of money to get a project build this.
Thank you for the opportunity, Chen. And I do encourage investors or anybody that's listening to reach out to the company. We're always happy to talk about what we're doing. in an open and transparent way so that they have a full understanding of how things are going.
Okay, great. Thank you.
Thank you.